Holy hot dogs. I don't know if I'm excited about that, but I don't know if I'm excited about that. Yeah, gold held steady. Silver's almost $50, dude. I'm in the back office playing around with my little 3.89%. And we gotta rethink things. I'm taking a different vehicle today. We're taking the X7. Nice and rainy outside. Man, I'm not used to driving that thing. I got to where I was going. I'm laying on the floor with the baby on my stomach. I was just looking at CoinMarketCap. Holy cow, dude. I forget how quickly those tokens can drop. I was literally thinking the other day, like, going all in on Chainlink, Ethereum, Solana, and I was like, no, I gotta stick to my dividend strategy. I wouldn't have been able to sleep tonight. Chainlink dropped 30%, Avalanche dropped 30%, Ondo dropped 30%. Oh, she just puked on me. Alright guys, I'm back at the computer. I'm eating steak. About to hop on here and see how horrible the crypto crashed. Oh wow, it looks like it's bouncing back. What's up guys, brand new day. It's Saturday morning. So what do you guys think about the stock market correction? What are you guys doing? And the crypto correction? Crypto, man, the altcoins, a lot of them dumped like crazy. Some 30%. Wild. But in cryptocurrency, that's actually not that uncommon, so I wouldn't be shocked. Check out that old car. It's Cars and Coffee over here. I'm not taking part in it. I can only cruise through the Cars and Coffee because I got to get back to dad stuff. I'm a dialed in dad, focused on that. But no, so what are you guys doing? Are you guys dollar cost averaging anything? If you are, leave some comments. Shout out to the Running Mans. He wrote that he wants to get some more XRP and XLM. He loves those. And I honestly didn't buy any more cryptocurrency. All I have is Bitcoin. So I just have a little bit of Bitcoin. I might add more if it goes way lower, but the amount I have, I like. And I did get some more SCHD because I'm focused on my dividend investing strategy. And if stocks drop lower, I'll continue to add because I like increasing my yield on cost. But you know, stocks don't tend to bottom on a Friday, so we might see more flushing out on Monday. We'll see what happens. It's a holiday, so a lot of people are off school, but I think the stock market's open. It's Columbus Day on Monday. But it's fun to look up a lot of the ETFs that everybody talks about, I talk about, and see how they did. You know, like I actually wanted to see how all the covered call funds did. So QQQI actually did better than QQQ. QQQI, I guess the covered call aspect gives you a little downside protection. It was like down 2.7 some percent. QQQ is in the down 3% plus. SCHD was like 1.4%. Didn't have much downside protection like you'd think it would. I don't think anybody wants that dog anymore. I'm the only one holding it. If you guys, I get a lot of comments like, why are you holding that dog? I know, you just want to take it behind the barn and shoot it. But I'm not giving up on it. I've defined my goal. My goal is to have reoccurring income that comes in without selling shares and automatically goes up more than the rate of inflation. That's my goal. So for me, it seems like one of the best tools to do that. Also, it needs to be tax efficient. Oh, shout out to Investor who left a comment. He said, because I was showing yesterday that if you have $96,000 a year in income and it's all from qualified dividends, you pay 0 taxes on the income. And he made a correction that because you have the standard deduction if you're married filing jointly. I forgot about that. Your standard deduction is $31,500, so you can tack that on top, and it ends up being about $128,000 that you can make if you have strictly dividend income coming in, and you make less than, and you can make up to $128,000 because you have the $31,000 standard deduction, married filing jointly, plus the $96,000 dividend income. 0 tax rate. You can pay 0 taxes on up to almost $130,000 a year. So that's a massive benefit. I see that's extremely powerful because when you factor in your tax rate, you have to make way more so you have your after-tax income. And keep in mind, it's only on qualified dividends. So like real estate investment trusts, things like that, they don't have that tax benefit. But it's pretty powerful. These market corrections, though, these are opportunities. If you look back in history, every time the market had a big correction, it was always a good buying opportunity. Except in Japan, maybe. based on our economy and based on our stock market. And like Warren Buffett says, you know, you shouldn't be seeing the stock ticker go up and down, bounce up. If you think of stocks or businesses as like something where you have a price ticker go up and down every day, bobbing up and down, you shouldn't really even look at it daily. You should buy it, set it, forget it, and check on it every so often. It's like he was saying, like if you buy a farm, you don't look at the price quote every single day of what your farm's worth. And if some guy, you know, your next door neighbor who's a manic depressive drunk tells you one day some crazy price and then the next day tells you a lower one, you're going to assume that your farm is worth less. No, you know what it produces, you know why you bought it, and when it goes down in value, or the lot next door goes down in value, you know what that can produce, you know why you want it, and it would be on sale, you'd be excited. Because sometimes when these corrections happen, you can see a lot of that hot air come out. But I have to say, we are on the edge of massive change in the world with AI and robotics. And I even think about it all the time because I'm holding SCHD and I'm focused on income, but I'm holding yesterday's winners, today's losers. They're more mature companies that are paying a raising dividend, which is great, but you know, you do have to ask yourself, do you want to have exposure to the future? Whether you're selecting single stocks or buying ETFs related to certain tech sectors, robotics, chips, you can get lost with everything. There's so many different options. But I like to just keep it simple. I like to keep things extremely simple. So when something like this correction happens, and if we go lower, I have conviction, confidence, and excitement to buy more. Because I define my goal and I know what I'm chasing. You guys ever look up Ray Dalio's all-weather portfolio? I'll throw it up on the screen. A long time ago, I listened to the book Unshakable, and he goes in detail about that portfolio. Certain amount of gold, certain amount of long and short-term bonds, certain amount of equities. And basically what it is, each sliver of his portfolio is connected to an economic cycle. Inflation, deflation, bear market, bull market. And I started thinking, damn, I want to look at that again. I want to see how that performed recently with everything going on. When I saw his original portfolio years ago, and he had all the gold in there, I think it might only be 5% gold. But I remember thinking like, because I used to listen to Buffett. Like Buffett said, man, if somebody in outer space saw you buying gold, they'd think you're crazy. They'd watch you dig it up out of the ground, look at it, clean it off, put it back in the ground and bury it. You know what I mean? And just hold it. They'd be like, what in the world is this? So, you know, I used to have that in the back of my head. But when you look at the price of gold, and you look at the price of hard assets, is the money printer ever going to get turned off? Most likely no. So you do wonder, like, man, there is a place in your portfolio for a little bit of gold. Oh, I also want to mention quantum. I am blown away that quantum didn't dump 20 times harder. So I really think that the quantum like narrative and story is in the mainstream now, and people are looking at these stocks like they were looking at all the AI stocks, and people don't want to sell them. The ones who are accumulating, and they think they have way more upside, which they might, but I sold 80% of the quantum in the account. I still have 20%. I have like 10,000 Rigetti, 10,000 D-Wave, 10,000 IonQ. The gains were they were almost 1,000% return, and it was like a hockey stick. So I thought, I'm gonna get out of this. This was like 3 days ago. So I made a video about it. But what I'm getting at is, I was really surprised that they didn't drop much more than they did, because they would trade almost like crypto when I was buying them originally. And they would have days where they would drop 20%, 15%. And most of them dropped like 4 to 6%, which was really surprising, to be honest, for me. They're calling Rigetti Wall Street's favorite stock. The ticker's RGTI if you wanted to look it up, but this is not financial advice. I'm not telling you to go buy quantum stocks. When these corrections happen, it just always reminds me of why valuations are so important. And how are we valuing a lot of these things? It's a lot of it's speculation. It sucks because it's like all the massive gains I've had were all speculation. Like they say, fortunes favor the bold. Like when I took massive risk, all the massive gains I ever had was from speculation. All the mediocre dud gains I've had is when I go off of valuation. I think it was like Ken Fisher, someone said, like, is the market fundamentally broken? Like value investing? Is it all momentum based now? It feels like it is, with algorithmic trading and bots and stuff. ETFs, all the money goes to the top 10 holding, and it's like the money gets pulled. Like I think 70% of the returns from the S&P 500 were from the Mag 7. But I've also seen that sometimes the best returns, they come after the worst performance. Like some of SHD's best years were after its worst years. So that tends to be the pattern. I'm not saying SCHD is going to have great years. I could be holding this dud till I'm older and look back and say, what in the world, dude? I left so much money on the table. I should have just been buying VOO. So that's probably what you should do. Not financial advice. I'm just saying that over time, it's historically outperformed. And we're going into the fourth industrial revolution: AI, robotics, automation, the productivity era. So it's hard to say, how Coca-Cola or Pepsi or Home Depot could really grow much more, to be honest. But my goal is to have growing income, so for right now, that's the best tool, especially with the dividend being qualified. And I want to grow it passively. I know a lot of people sometimes they'll mention real estate. I love real estate, but right now I just want to grow it more passive. I have a business, 4 kids, a lot going on. I'm not sure what this video is even about. I guess what I'm trying to say is that define your goal, keep it simple, stay consistent, continue investing in what you like, and when the market corrects, whatever it is you wanted before is now at a cheaper price.